Hello traders, I hope you're doing good. Do you know what is one of the most important things to be a successful trader? One of them is risk management. As we all know, there's so many traders who just even don't know what the risk management is. They have heard about risk management, but they really don't know how to use it. And don't worry, if you don't know what the risk management is, or if you're not sure what kind of strategies you can apply when it comes to risk management, then keep on watching and I will try to explain. And what I am going to do, because like I always say in every video, I am trading with the 5ers with instant funding because they have like 6% drawdown, and then later on in the stages you have 4% drawdown. So I am going to just focus on those drawdowns that the prop firm is asking me to apply on my trading. So that's why we're just going to go through, and I'm trying my best to explain, my strategy, how I approach risk management, and also just explain all in kind of general what kind of risk you should use for whatever like account size and all that kind of stuff. So before I start to share my screen and start to go through my trades and my risk management, first we need to answer some simple questions. First question is, how big is your drawdown? So if you know that your drawdown is, like in my case, 6% or 4% when you're later on in the stage on instant funding, so 6%. So how much can you risk per trade? And then you need to look in your strategy, because it's very important to see if you have like losing streaks. Like for example, me, sometimes I can get 6, 7, 8 stops in the row. So it's not like, stop, profit, maybe like 2 stops in a profit, but it's like 6 in the row. There's 6 stops in the row. And if you risk 1% and your drawdown is 6%, then do your math. 1% times 6 is 6%, and you have lost your account. So don't just assume that 1% is the bottom line. That's what you can risk, because numbers go 0 point something. And I've said it in the previous video, because I think in this industry and forex, like altogether now, somehow people just think 1% is that bottom line. It's like, that's it, we need to risk 1%. And the same thing goes about the targets. Like monthly target has to be 8 or 10%. And that's just not true. The same thing about like the risk. It's just not true that you need to risk that 1%. Decide how much you can actually afford. What is the biggest risk that you can take per trade? So if you know that sometimes you have like 10 losses in the row, you need to make sure that you halve your risk, at least 0.5%. From the 1% that you thought, you need to at least half it. Because what happens then, if you risk 0.5% on the setup, you have 6% drawdown and you risk 0.5% now. That means you can have 12 losses, not 6 in the row. But obviously if you have 12 losses in the row, then you will still blow your account. So 11, but then it's psychology wise, I don't know how you can really bounce back to it, because you have like 11 losses. And okay, I'm going ahead of myself here. So just first of all, what is your drawdown, and decide on your risk. Okay, and if drawdown is like 5%, 6%, if it's smaller drawdown, that means your risk also has to be smaller. Unless your win rate is really high and you're very confident that you're not going to have 4 or 5 losses in the row. Okay, now we can move forward. Right, so now I am going to record my screen and I'm going to show you my Myfxbook stats. And I choose to show my Myfxbook because it's easier to see like all the percentage, so it's just easier for me to explain and for you to understand really as well. So this account is demo account. I only traded it from, let me check, from 18th January till 26th. Is that? Yes. So, right, so I traded this from 18th till 26th. I will show you all the trades that I took. We'll talk about the risk management, and I will try and also just go through some trades just to show you like maybe like a trade idea that I had, but let's more focus on the risk management in this one. So I will start to share my screen. Right, so this is what you can see in here is my Myfxbook. It is, as you can see, I'm very pleased to show the profit that I actually made the profit of that time. As traders, those who share the stories on their social media and stuff, we like to show the wins. So I'm very pleased that it actually was winning week, a little bit more than a week. So in all total, I gained 3%, but the drawdown, it was 2.99%. What's the most important thing to look at is my trades. So altogether, I took 16 trades, and that was from 18th of January till 26th. So I took 16 trades, which is on average, it's okay. I guess it's okay. It's not over trading. It's like my strategy, the way I trade. And in this case, I was trading 3 pairs in here. So I was trading EU, GU, and GJ. As you can see in here, I did try to keep my risk 0.5 to 0.6. It is less than 1%, because as you can see, this one was quite an ugly drawdown. And if I would have risked 1%, I would be like, bye-bye. I would probably lost my account because I risked only 0.5%, or 0.61 was 0.64 was the biggest one. I ended up actually doing well, and I think psychology wise it's easier to bounce back when your losses are not that big. As you can see, so I was targeting 1 to 2, 1 to 3, so you can see in here it's like 1 to 3 trade, risking 0.6 to get almost 2%. And I think risk overall is good. And so let's look at the first trade. I also want to show a little bit of my journal as well. So I did journal, and the first trade that I took on this account was GJ shorts. Trade was taken according to the plan, so I felt good about it, used proper risk and accepted it no matter the outcome. And as you can see, the outcome is very ugly. And I also do like a link on the trading view because it's much easier than for me. Everything is organized. I can see what's actually happening, what I was thinking, and I can see that this didn't work at all because it's like literally the trade was not even in the profit. Okay, maybe like, I don't know, like a 2-pip or something, but this is terrible. Okay, judge me guys, judge me. I'm here to get it. Okay, anyhow, so then what I can do, I can actually go and recreate, you know, what I was thinking, and I can use the replay tool on the trading view, and I can just play it like back what I was thinking at that point. So in here, as you can see again, we created that resistance in here, and I was looking for, actually let me quickly check, it was in there. Just these candles are a bit smaller. So yes, actually I was in a trade right here because what happened was I saw a double top, as you can see here and in here, and then actually, I don't know, when I'm looking at this, I'm not really happy. And the trading journal was not really that perfect. So anyhow, the first trade was a very, very ugly loss. Then when we move to the next one, right, so that was ugly one. Okay, now let's move to like a good trade, like GBP USD, okay, and that was on 20th of January. So let's go there. So GBP USD, and it was 20th of January. Oh, okay, this is much better. So we can see in here that the structure was broken. I entered the trade, and let me look at what I was writing in the price kept the support, created double bottom, and gave bullish engulfing candle as confirmation. Entered according to the plan. Closed trade manually as it was Friday and closed to the market closure. Okay, so I actually took 2 of them. Yeah, you can see, so these are the both trades. So I took one and then I took another one later on. It's interesting to go back for me as well to like see what I was actually doing. Because this trade looks okay to me, and sometimes as you can see, like I'm already in this one, this is not closed, this is still open trade, and I'm taking another one based on kind of same setup. So some would say this is a scale in, so I should maybe keep the risk smaller because it's a scale in trade, so you don't want to kind of go into the same setup with the same risk. It's that same idea kind of, but it did work out, so I'm happy about it. Okay, and then we can move to like another, maybe a loss. Let's see 23rd January GJ longs. GJ that week was just terrible because if you look at my trades, GJ is a loss. In here, GJ, okay, that's a win. GJ, a loss. GJ, a loss. It's like, oh, GJ bullies me. GJ was terrible to me that week. The GJ, if you look at this all together, so this was minus 60, minus 0. So 1.2 minus. And then on here, I made a beautiful 1.6. So that's, I'm already covering those 2 trades, and I actually made a profit. So there you go. You can see that the risk management is the big deal. For me, 0.60, it was like okay because I knew I can hit a drawdown, but then I know that my comebacks will be stronger and better because I know my risk reward, and that's another thing I want to talk about is risk reward. So let's say for example, this trade in here. Okay, look at this risk reward. This trade hit take profit, and here it's 1 to 3. And this is why I can have 3 losses in a row and then 1 winner, and I know that I will go back to break even because I had 3 losses, but because my trade is 1 to 3, so I risk 1 but I make 3, that means I can cover my 3 losses that I had before. And I think it's really, really important for traders to understand that the risk reward is something that plays a big part in your strategy. So, you know, if someone would trade with 1-to-1 risk, let's say, risk reward, so that would be loss in here, and then see how in here I have almost 2 hour. That would be only 1 hour maybe, because you trade with 1-to-1 risk reward. See, when it comes to risk management, it's really hard. It's like you need to be so precise, and you need to know your numbers. You need to know how much you can risk in a row, how many trades you can lose in a row. So like when I trade all my 3 pairs, I know that the losing streak is going to be bigger for me, way bigger. But when I trade only like 1 pair on account or 2 pairs, then I know that, you know, I can risk a little bit more because my losing streak is not going to be that big. So, but in here, I think this is a good example, and I'm really proud of myself for this again, that I've done the job. I think I've done a good job in this one, because it looks like a good risk management. And don't look at this 0.01% because I needed to confirm my account for my Myfxbook. But yeah, this is it. So, in another thing, while I'm sharing all this, it's good to have a trading journal and start to do it, and just write your emotions, write everything, write how you feel. Put the trading view in their links, because then you will see, ooh, this is ugly. This is another ugly one. Why am I showing this? But okay, have a look at this one. So if you look at it in here, this trade was just terrible because obviously there was this bullish pressure coming out from here, and we broke this zone, this one in here, and I was just, yep, we're going up. Whoop, whoop. But you know what? Actually, I know what happened next. I was taken out, and then my profit was hit. So actually, let me show you. So let's quickly play back. Okay, so this is where I was stopped out, and then this happened. So yeah, nice, huh? So it was nice break. I entered and I burned. I entered and I burned. So, but oh well, happens to the best, right? I think this is it. So, and then I took this trade. Yay, all happy chappy, because I was thinking, you know, stops below that. And then target. And voila! That's terrible. And yeah, I hope this was a little bit helpful. I really hope so. And like I said, I do feel proud for these results. And I think it's so important for traders to come and do things like this to show the results that can actually inspire and help. And don't look at the money, like don't look, you know, in the dollar signs, because that says nothing. What we need to look is the risk and how trader is, you know, risking in what I think when I look at this myself, when I see the 4 losses in the row, but then I see that I bounced back really nicely, that I could pull a good trades, and I was, you know, not emotional about it. And it just comes all with experience. And I think this year I said that I want to be bold, and I want to be a good example for other traders in this industry. I want to be like a different trader who shows struggles and all that kind of stuff. and also, like, I can tell to myself that, you know, I'm doing a good job, I'm being really good. and I really hope that this helps. And if you want to see more videos like this where I go through the risk management, or some even suggested me to go next to the whiteboard and do like all the graphics and really explain into detail how we should risk and how we calculate the lot sizes. If you want to maybe see something like that, you can let me know. I would be happy to do so if you will watch it. So it's not like I'm wasting my time, because I'm just thinking what people would like to see, what would they want to watch. So, and that's it. And I think that's enough talking to me. I'm gonna stop this recording, and that's it for this video. I know it was a long one, so if you survived all the way through, please let me know, because I wanna clap and say thank you so much for watching it all the way through. The next video is going to be a very raw and real video where I really open up about my struggles, my emotions more like when it comes to altogether about this forex industry, because some traders can be really nasty, and I think it's just because I'm openly sharing my journey, some can get annoyed about it. Maybe some think that I'm sharing too much, you know, because they are not liking it the way I explain things, because I'm like showing too much reality. Basically, I'm like being real and saying 95% fail, you know, and I'll open up later on in the next video, and I'm ready for judgment. If you are judging me or if you're supporting me, I honestly don't care, because for me, I want to be transparent and I want to share my journey. Take care, use proper risk management, and I will see you in the next video. Bye.